What's up, everybody? We back with another video, and in today's video we're going to go over how to really identify trend channels and how to draw correct ones to spot high probability setups. And really, by watching this one video, you're going to be able to see how I spot every single high probability setup on the chart day in and day out, and how I'm able to make money consistently in these markets using these simple techniques. So let's get into it already. The day started off with this obvious downtrend. So first thing that comes to mind is that we're only going to look for short setups. Another important thing when it comes to trend lines is to not constantly be adjusting the trend lines once there's a break like we see here until we have more confirmations that the setups are really touching this trend line. So what do I mean by that? When it comes to trend channels, you always want to go with what is most accurate with the most touches, especially with the first couple swings. So here I drew it from the bottom. So I had one touch here, another touch here, and another touch here, and we consistently bounced at the bottom side of this trading range or this trend channel, signaling that, okay, it's accurate, especially once we touched down here, and then we had a lower high setup once again, where we have this arrow, which is actually my first trade for the day, which was a very, very good setup. So we can even draw this short-term trend channel. And the rules with trend channels are that once there's a break of the channel and a new extreme, then we can consider it to at least be over and for the trend to either resume, lead to congestion, or a reversal. If we're looking at this upward trend channel, we have a break of it, and then we reach a new high, signaling the uptrend is potentially over and this downtrend will resume. And once we have a lower high confirmation off of the EMA, as well as a two-legged pullback, so we have a new low here, here's one pullback, here's another pullback, and this lower high confirms that pullback. That was an excellent trade that led to lower prices. Once again, we have an upward micro trend. We have a break and a new high, and we have several touches at this point. We also have a nice bearish signal bar, and just to illustrate how important it is not to just adjust the trend line once we have a break, is that you would have missed this setup if you had drawn your trend like this instead of the one I had, because you would have made it wider thinking, oh, okay, this wide trend looks right. But in reality, you always want to go with the first few bars, especially in the micro trend. So if we're drawing like this, we can see that this trend fits much, much nicer compared to the one I just had drawn. So we have a break, and it's also a two-legged pullback. So we have one pullback, we have a new low, and then another pullback, nice bearish bar at this point where we bounced once, twice, three times, four times. This is the fifth touch. Excellent, excellent signal bar, excellent trade. Now, what I saw in this trade was that we had a new high here, we went down, we had a first entry long, and then we had another pullback and a second entry long with a nice signal bar in this direction. And what I actually think is accurate is right there. So we have, look how many bars are stacked right here. And then once we have more confirmation, a double bottom, and we closed above the EMA, also we have this micro trend with a break and a new low. Then we can be confident that this double bottom, combined with the fact that we bounced here, nice signal bar, that was a very nice trade. And actually, you can mark this trade as well as a higher low, confirming that setup. And even another failed second entry short right here. So we had one leg up, break, another leg up, nice signal bar, expecting to reach the top of this range, and we did. Now prices pushed lower again. we have a break, and we expect a new low until we look for trades in the opposite direction. And then we eventually reversed. So now if we're looking at a bigger picture, we also got a break and a new low of this wide downtrend, signaling the trend might be over and we can start looking for trades in the opposite direction. And these come in the forms of second entry longs and two-legged pullbacks, which I have been demonstrating already. So let's go on to the next trade setup. So now, once again, we have this upward trend where we have several touches. We have a break, and we're expecting a new high until the trend is over. We also have this micro downtrend, a break, new low right here, one leg up, and then we push lower again, another leg up for a second entry short, because if we're counting from this new low, we pushed up once, we had a first entry short once the bearish bar broke below the one previous to it, pushed up again, second entry short, but what this trade really is a failed second entry short, and you can go long one tick above this bullish signal bar, because all the people who are going short thinking this downtrend or this uptrend is over are going to be trapped. So it's failed second entry short above the EMA, nice signal bar, expecting to reach these highs, and the prices ran up. Now, once we have a break and a new high of this uptrend, then we reach a point of congestion where we can start potentially looking for trade setups. So now we can see that once we have this trading range in place, following the break and new high, and expecting a reversal once again, when we have a triple test confirmation, a nice bear signal bar here, that is a nice short, as well as this lower high confirming the bearish momentum below the EMA. And this is also a breakout pullback in the bearish direction. And we have a failed second entry long right there once again. So we have this downtrend in place. We have a break. And then we're expecting a new low. This is a first entry long, second entry long failure, because now instead of the second entry short failure right here, we have a failed second entry long, because all the people who are going long below the EMA are going to get trapped. So you can sell one tick below the signal bar, and the trade worked out very nicely. So now we have a break and a couple legs to a new low of this downtrend as well. And then we have an uptrend, we have a break, and then a new high, and then we reach these points once again, which is when we could start drawing this trend channel or this trading range. And the reason I marked this trade is because once we had a break and a new low of this downtrend and resumed prices going up with such a momentum, and we have a higher low confirming that momentum with a nice bullish signal bar, that was a very nice trade once again. So now we finally broke out of the trading range. We had a break. We pushed below the EMA, and we were expecting a high still, because we haven't gotten a new high of this. And also, if we look at a wider picture, prices really look like they're just in a even wider trading range. So we went from the lows, we reached the highs, we pushed down, we only made it to the midline, when in reality we're supposed to reach the lows. So once we pushed back above the EMA, it signals that there are more bulls in the market, and it creates a bullish divergence. So we have downtrend here, a break, a new low, and then we have a higher low with a very, very bullish signal bar above the EMA. And once again, we're expecting to reach these highs because we had a break and no new high of this uptrend yet. That was another excellent trade. Now, we did have a break and a new high of this uptrend. We're reacting at these prices once again. And once we push below the EMA and we have another failed second entry long, we can take this short as well. We have a new high here, one pullback or one leg down, another leg down, second pullback, bearish entry, bearish signal bar, and that trade worked out. So now we keep pushing lower. And what we have here is another failed second entry long. One leg down, another leg down, bear signal bar at this trend channel, confirming the trend channel, bear signal bar, close below the EMA. Nice trade once again. Here, another two-legged pullback. New low, first entry, second pullback, first entry short, second entry short, counting from this low, first entry short, second entry short, excellent bearish signal bar. And now we had a break of this downtrend. We have to draw our short-term uptrend. We have a break in the new high of the short-term uptrend. And then we push below the EMA. We have another micro channel. And this lower high is confirming this bearish momentum after a break in a new high. And that trade worked out as well. The day closed off with some more selling, but we don't like to trade really that late in the day. That's going to wrap up the video, guys. Hope you guys learned some things. Leave me some comments. Let me know what you guys think. Have a good one. Peace out.